Does student loan interest compound? Have you ever wondered how student loan interest really works? It can be a bit tricky to navigate, especially when it comes to understanding whether that interest compounds. Let's break it down in simple terms. For most federal student loans, interest does not compound in the way you might think. Instead, these loans typically use simple interest. This means that interest is calculated only on the original amount borrowed, known as the principal balance. So, if you have a loan of $10,000, the interest will be calculated based on that amount alone. Interest on federal student loans accrues daily. This means that every day, a small amount of interest is added to your loan based on the principal. However, this interest does not generate additional interest during the accrual period. So, it stays straightforward and simple. Now, here is where it gets a little more complicated. If you have unpaid interest, especially during times like deferment or forbearance, that interest can capitalize. Capitalization means that the unpaid interest is added to your principal balance. For example, if you have $10,000 in loans and $500 in unpaid interest, your new principal balance would be $10,500. Once this capitalization occurs, future interest charges are calculated on this new, higher amount. This can make it seem like interest is compounding, even though the original calculation method remains simple interest. When it comes to private student loans, the situation can vary. While many private loans also use simple interest, some lenders may apply daily compound interest. This means that interest can accrue on both the principal and any previously accrued interest. If you do not make regular payments, this can lead to a much higher total interest cost over time. Understanding how interest works is essential for managing your student loans effectively. It is always a good idea to pay any accrued interest as it builds up. This can help you avoid capitalization, which can significantly increase the total amount you owe. When dealing with banks and credit unions that offer private student loans, make sure to review the loan terms carefully. Each lender may have different policies regarding interest accrual and capitalization. Knowing these details can help you make informed decisions about your loans. In summary, federal student loans primarily use simple interest, and while interest accrues daily, it does not compound in the traditional sense. However, capitalization of unpaid interest can create a compounding effect. Private loans may vary, so always check the specifics with your lender. Understanding these concepts can help you manage your student loans more effectively and keep your financial future on track.